Hi there, I'm Doireann Mc Dermott. Well, the Bank of England left interest rates and asset purchases unchanged. I have Angela McGowan, Chief Economist at Danske Bank in Belfast on the line. Hi Angela. So it was widely expected that there would be no changes at Mark Carney's first rate decision. However, are you expecting to see some changes at the next meeting?
Yeah, we weren't expecting anything in terms of the interest rates or the QE this month. But we do think if there's going to be anything ahead, it would probably be very much the kind of softer changes that we saw a little bit coming through today in terms of the statement that we got. We don't normally get a statement when there's no policy, no statement is the way things have traditionally been, but we got a bit of a statement today. So we do think there's going to be some softer things coming through in terms of communicative changes. And we do expect that very much in August. I think they have been asked, the committee have been asked to provide an assessment. In August, the Chancellor had asked them to provide one on forward guidance policy, and I think probably that is the route that Carney will take. It's been very successful for him in Canada, and I think it will probably be what the Bank of England are about to embark on. With regards to any changes next month in terms of QE or interest rates, that's going to be very much data dependent. At the moment, things are going quite smoothly in the UK. They're seeing a relatively good recovery. Still quite weak, I have to say, but very recently they've seen their PMIs, their indices for manufacturing, for services, construction, all improve. Actually, the services one grew for the fastest for 2 years. The PMI there went up 56.9. So quite good. House prices again up for a 3-year high. So I think they're not going to move unless there's a deterioration in the data. So it's going to be very much dependent on how things move along in the next 4 weeks.
And in terms of annual growth, what growth patterns will we be witnessing?
For this year, 0.7, and certainly some of the indicators that we've seen, as I say, there's quite good PMIs that we've seen in the UK economy. In services, manufacturing, construction. All the indications at the moment say that we're going to see positive growth in Q2 of probably about 0.5%. But over the entire year, we don't see it getting much higher than 0.7 or 0.8%. Next year, we're a bit more hopeful, assuming things remain calm in the global environment. We have growth projected there for about 1.4% next year for the UK.
And looking at inflation, do you think we will see it rising towards the end of this year? And what is your inflation forecast for next year?
Yeah, it takes a little bit of while to get the inflation under control, and that's why I suppose they have these forecasts that are 2 years out. They kind of target it 2 years from now because they know, there's a lot of things can happen. The inflation rate's supposed to edge up, I think, towards about 3% by the end of this year, and he has said that in his statement. He does see it rising in the near term, but I think in 2014 we'll start to see it falling back, but it isn't supposed to meet the target level until the end of 2014, and I suppose what he's really doing is trying to keep expectations around inflation grounded, so people don't panic when they see it rising. Even with him in charge, he's letting them know that this was expected, but I suspect he thinks that the Bank of England forecasts in terms of it reaching 2%. By the end of 2014, early 15, he seems to be feeling that a consistent view with him. It's consistent with the previous inflation report, so it'll take a little bit of time to get that down.
And the Bank of England also signalled concern over yields. The sterling fell as rising yields weigh on economic outlook. Now, what did you think about this concern and about market reaction to today's commentary?
Yeah, I think he was very much working to talk things down, and that works too. We've seen it working very well in the ECB, that you can have these verbal indications of which does move markets quite a lot. The market rates, the long-term rates, it's never made any sense to us, the fact that they lifted so heavily whenever the Fed had come out and said that they were going to pull back on the QE. You could understand maybe why it might affect US bond rates, but really whenever they start to change bond rates all around the world, you have to say, but is that really aligned to the economic fundamentals? And I think Carney today was saying that this isn't aligned, this doesn't look the way that the market's view of long-term interest rates isn't the same that we hold in the bank. So in terms of those rises in yield, he's pushed them down a little bit, I suppose, and that's no bad thing either.
And Angela, as I mentioned earlier, we saw the pound fall today. What are your thoughts on the sterling's current performance?
Yeah, well, it fell a bit back immediately after the statement, and I suppose that's no bad thing in terms of exports. If you want to build up the export base, the depreciation of sterling wouldn't do any harm. It is a bit strange. I mean, markets don't always react the way you would expect them to. I mean, last month, whenever they kept things on hold, we saw actually the pound rise. This month, things stayed on hold, but the pound fell. It's really hard to judge what markets are going to do. They don't always act rationally. But I suppose, the fundamentals are good in the UK and they're improving. But I suppose what he's saying is it's slow growth. And they don't see interest rate rises for some time, so that will hold sterling down a little bit.
Thank you very much, Angela. And thank you for watching Dukascopy TV. Well, it has been quite an exciting week so far. And tomorrow, on the last day of the trading week, I will be looking at some Latin American currencies to see how they are trading ahead of next week's rate decision for Brazil, Chile and Mexico. But for now, goodbye.